Joining us now for more perspective on the oil markets, because who really knows what's going on and who really knows where oil prices are going to go? Well, maybe John Hofmeister does. He's the former president of Shell Oil and the founder of the nonprofit group Citizens for Affordable Energy. So almost every day, John, we point to that story because almost every day you hear about someone reading the tea leaves in some sort of action and what that means for oil prices going forward. So today the story is, hey, we've had so much cuts in spending that maybe we're underestimating what that spending is going to do to prices going forward. Where do you land on this, John?
I do think we're underestimating prices going forward. While we're bouncing around now in the 50s, maybe high 40s, we'll probably see another month or two of bouncing around. But we have cut back so aggressively in the U.S. in particular and in Canada. And keep in mind that if we're going to see increased demand, some of the financial institutions are going to be reluctant to lend a lot of money to companies that would like to jump back into production who have a history of negative cash flow, which is what is compounding the problem right now. So I don't see a snapback in production coming anytime soon, whether it's from the majors with their cutbacks in capital spending or from the independents with their seriously increased cutback in capital spending. And so I think we're going to find ourselves short during 2016, which I think is going to see higher prices than people are currently forecasting.
And I know you've never been afraid, John, of putting some numbers here. So when you say higher prices, are we going back to $100 oil?
I think by later this year, we're going to be pushing up towards 80. Okay. I think in 2016, we're going to be pushing very close, if not over $100 a barrel, maybe not in the beginning of the year, but during the course of the year. And remember, in the U.S., it's an election year. So people are going to be asking the presidential candidates, so what are you going to do about the high prices of oil? Because we will have been past this low-priced period.
120, speaking about the spending cuts, John, $126 billion has already been chopped out of spending in the oil markets in relation to about a 50% drop in oil. Does that, does that sound about right, or has it been too much?
It can't be too much because the revenue has been cut in half, and people who were negative cash at the high prices, they just don't have any money to spend, so they have no choice but to cut back almost completely. And so you have firms that are down 50% or more in their rig count, and that's really an adjustment because they're just out of money, and the financial institutions aren't going to give them more under these low-price conditions. Right,
because of their credit and because of what's happened, in the oil markets. Now, one of the things, John, you mentioned overseas is that the longer that the prices are low, the more it's going to punish countries like Iran, punish Russia, but the more you think it benefits Saudi Arabia. Tell me how.
Well, Saudi Arabia, I think, is using their financial well-being to take on some statesmanship here. And I really think that this is a diplomatic maneuver in a negative direction towards Iran and Russia to keep prices low. And so by committing to sustained production, they are harming the people who they perceive as harming their future long-term interests in a political sense, in a geopolitical sense in the region. And so with the U.S. taking what they perceive as little or no leadership in the region, which is a major change from the past, they have to do what they have to do, and that is make it more difficult for Iran, make it more difficult for Russia, who are seen as partners in hegemony in the Middle East. And so the Saudis, I think, are really trying to influence an outcome that is 2 or 3 years off into the distance. And
they're willing to let go some of their spare capacity, right? They're willing to use some of their spare capacity to do this.
That's right, and to absorb whatever losses they may experience by not having the high price to reimburse their social costs.